NIIT stock has taken a beating in trade today after the tech company failed to meet market estimates in the second quarter. Joining us on the show is now Mr. P. Rajendran, the Joint Managing Director and co-founder of the company, and also AgamVakil is here to take us through the numbers. Agam, over to you.
Hi, sir. Thanks for joining us. So, my first question will have to do with the revenues. And while we have seen a growth on a quarter-on-quarter basis, we've also seen a decline on a year-on-year basis. Can you take us through some of the factors that you attribute to your performance when it comes to your top line?
On the top line, I guess there are 2 points. One is that this whole reorientation towards Ind AS accounting system, that has changed some of the numbers which we had to use last year and this year. So it is just for creating the comparison, we have created the last year's number right now. So that has affected slightly. But I think the larger issue for us this quarter was, though the growth of the company internally was all led by the corporate learning group, we had challenges on the India business side. So India business, whether it is the schools business or the skills and career, and that basically comes out of 2 simple things. One is, of course, the hiring and training freeze, which I'm calling it a freeze, but of course a few people are getting hired in the BFSI sector, because we had a fairly robust non-IT business running, and that has taken a little hit last quarter. Second thing is I think the system lost a little bit of time because of the transitions we had to do, because since the tax structuring has changed in the country. So I would say that pressure on the India business side neutralized to a large extent by the growth on the corporate learning group. That is why the picture is as you can see now.
Okay, sir. So coming down to your outlook for the second half of this financial year, when it comes to your growth, if you keep the accounting standards aside, how do you anticipate growth to pick up, considering you have seen some amount of challenges in your India business?
No, so a couple of things. One is as far as the corporate learning group is concerned, which has shown a 14% growth year on year on constant currency basis, and closed with a very good order book, $195 million order book visibility. Now this is probably the highest which it has recorded ever. So we are very bullish on the corporate learning group. And the orders which have got booked in the recent past. Last year we added, last quarter we added 3 more important customers for the managed training services, taking it to about 38 such clients in the Europe and US area. I think that's what is going to drive the growth for the next 2 quarters of this year. It will take time for the skills and career to recover. And in any case, if you see the seasonal pattern every year, our quarter 3 of skills and career is not a high quarter.
Okay, so some seasonality coming in as far as NIIT is concerned. Thank you, Mr. Rajendran, for talking to us through these quarters numbers and also the outlook. With that, it's back to you guys in the studio, Navneet and Pradeep.
Thanks for that, Agam. That was the management of NIIT Limited. The stock's actually seen a big correction coming about. It's down almost over 8%, as you can see it on your screen, trading almost at day's low.